Influencers, inspiration, and Instagram. This is Earned by Tribe Dynamics. Here's Connor Begley.
All right, welcome to Earned, everybody. Thanks for joining us again. Today, we've got one of the top deal makers in the beauty world, Shaun Westfall. Shaun, thank you for joining the show.
Well, thank you, Connor, and obviously thank you for giving me an opportunity to put a sport coat on and dress up like a banker for once in many months. I don't quite have your style with that Hawaiian shirt. I'll go for that on the next time. But it's a pleasure to be here, and as you know, I admire all the great work that Tribe does for the industry. So it's a real pleasure to join you here today.
Yeah, I mean, I think I'm really excited to dive into another angle on the industry, right? And learn. I think we have a lot of operators that have come in, but I think you have a unique perspective. And for those that don't know you, I think a few highlights for Shaun, right? So he's currently managing director at Jefferies, consumer and retail group. And I would say if you were to pick any random marquee beauty deal in the last 10 years that's happened, very good chance that Shaun's been on it. So a few, right, did the Charlotte Tilbury sale to Puig, Shiseido acquiring Drunk Elephant, Morphe sale to General Atlantic, Elemis to L'Occitane, Too Faced to Estee, It Cosmetics to L'Oreal, NYX to L'Oreal, Urban Decay to L'Oreal. There's a lot of them in there. Those are most of the big ones.
It's been a very busy decade, and it's been an amazing journey that we've been on here.
Totally. Well, let's hop into kind of a current day question, right? So I would imagine that the last year or so has really changed the market, right? Like, how do you evaluate a company that's got 70% of their footprint offline, or alternatively, how do you think about a business that's, entirely direct to consumer? Obviously, they're facing some advantages. So I'd love to hear about the last year first.
Yep.
And then second, what I'd like to hear about is, like, now that a vaccine has come out, retail is kind of coming back to life a little bit. How has that changed things when it comes to the beauty M&A market?
Yep, certainly. And I know both of those are very much on the top of my mind, on the top of our clients. We talk about these aspects every day. What I will say in particular about the COVID world, like many parts of the economy in other markets and industries, I think COVID really accelerated, in many cases, what was already happening. It took sort of business models that were perhaps antiquated and then, accelerated some of their struggles. Business models that were showing some disruption in digital had a content and community that it embraced, whether it was social or a set of consumers where they really spoke to that consumer with their brand. Well, in a COVID world, when you can't get an experience from a retailer, you're seeking out whether it's content and community online that basically showcases your brand and your reason to be and your products, and why that consumer should love your brand and your products.
Yeah, I would imagine if I was kind of a large corporate player and you're looking at your portfolio and, so much of it is exposed to this risk, you're like, oh God, like, I've got to get some digital assets in here if I haven't been doing it already. So how are they thinking about it? Have things shifted at all? Because I think now it's like, maybe I can go out and buy these businesses that have really been struggling for the last year on the cheap, right? Like, maybe I can get a deal here now that everything's coming back online. Are you seeing that kind of interest?
So that's a very interesting thought, because generally the large beauty consolidators, they're desperate for growth. They are not necessarily going to go out and look to buy something on the cheap or buy a broken business and think they're going to fix it. That's a lot of expended energy for maybe a small return. That world where you roll up the sleeves, get your hands dirty, rebuild a management team, reinvent a brand. That's honestly the world of oftentimes private equity, where they can spend more time and attention. The strategics, and if you look at in sort of the last decade of what's happened, maybe taking a step back, and this has been what certainly I've benefited in my career, and it's just been an incredible industry to be a part of, because it's full of such passionate entrepreneurs And despite a crowded market, right? If we all sort of sat back and we walked in an Ulta and we walked in a Sephora, and we saw how crowded the shelf might be, we would think, why in the world do we need another skincare brand or another cosmetics brand? But to these entrepreneurs, they see a void, and they believe in that void so much, and they believe that the consumer needs their brand. It's really what I love about the industry is there's so much passion for what they want to do and what they want to bring to the market. And many times they invent an amazing set of products, and they don't even think about the distribution. They just know they're going to take this product, whether it's the back of their car, in a farmer's market, or Sephora or Ulta. And the opportunity for the inventors, going back, 15, 20 years ago, they probably knew that the department store wasn't an option. It was too expensive. That's where all the big boys and girls were. And really what happened is Sephora and Ulta, and oftentimes QVC, was there for them. And that's how you saw really the explosion of the indie brands. The indie brand, by definition, was independent of large company and independent of legacy distribution, which could have meant department store, or it could have meant food mass drug, in particular, drugstores, where that's where oftentimes traditional beauty was sold before, Walmart and Target. And, really what happened over the past decade was Sephora and Ulta really became large enough to drive and deliver scale to these beauty brands. And then the large consolidators sat back and they said, wait a minute, we're under indexed to these high growth channels, and we need to step up and be a player. So, and that's a bit of a longer answer to your question, but really what happened is, or what happens, if you're the big consolidators, obviously Estee Lauder, Shiseido, L'Oreal, Unilever, you want to buy growth, and you want to go out and you want to buy that disruptive brand that was oftentimes a strong player in specialty beauty. And then it became a strong player in Instagram, social media, Facebook, which certainly that was NYX, right? NYX had traditional distribution, but they really found a new way to market their brand, a very efficient way to drive customer traffic to the retailer. Then, the next step of that is where we are today, where we're leveraging social media and a way of marketing and telling my story, but it's through new distribution. And that's obviously where, whether you're an investor in private equity or whether you're a consolidator, that's what you're really looking to. You're looking to that authentic story that has content, community, a two-way conversation, right? We talk a lot about conversation. Historically, conversation was one way. It was a big company telling you through the television to go buy my product.
Yep.
The wonderful part about social media is that was the advent of a two-way conversation. And
that's like, I don't know if you caught it, but in our last episode with Kevin Gould, right? So he's built businesses that went from 4 million to 75 million in the last 2 years. And the story that just I can't get off of is this, like, they started out and he's like, at one point you have 0 fans on Instagram.
Yeah.
He's like, and then, you get 1. And he's like, what do you do with the 1? He's like, well, you send him a message saying like, hey, thanks so much for following us.
Yeah.
And he's like, and that turned into a massive direct sales channel for them. And that's exactly what you're talking about, which is like, you can now have this direct two-way conversation from a brand direct to your customer in a way that's just incredibly impactful for, brand loyalty, for, all these things that weren't available, when distribution was different.
Yeah, and when we were working on NYX originally, which I would say was probably the first to come to market that really understood the power of influencers. And early on, what did they do? They got the influencer, or they made the influencer feel like NYX loved them. They were often, struggling. They were in their bedroom, just sort of trying to figure this out themselves, and NYX made them feel loved, and it was a mutual connection that was authentic and powerful, and that the consumer really adopted because that influencer spoke to them authentically. And I know
Yeah.
authentic is a word that gets certainly overused. I haven't thought of a better way to say it yet, so I guess we'll use it. But that's what's going on. I mean, if you find that influencer that speaks to you at a personal level, at an authentic level, then you're going to embrace whatever that brand he or her is talking about.
For sure. One of the names I didn't hear you mention when it came to distribution that I'm kind of curious about myself is obviously, you've got the new wave of distribution, which is like, you had Sephora and Ulta, then you've got the direct to consumer model. And then, obviously Amazon continues to make a really big play here. And I know that there are brands that are like Amazon exclusive or, that's what House Labs is, right?
Yeah.
Are you starting to see, what are you seeing on that side? Are you seeing people get significant distribution being Amazon only or being, having Amazon be a really big portion of their sales?
Yeah. So I think we're seeing, and we talk about COVID acceleration. I do believe that for certain channels, Amazon and COVID and the adoption of the consumer using Amazon for personal care and beauty for certain items, it's not everything. Amazon, as you know, is a marketplace. They're very transactional. It's about selling you something is kind of quick as you want to buy it, as quick as they can sell it. That isn't necessarily what you would characterize as educational and experience beauty. So I think Amazon is going to play an ever increasing role in what I would say are everyday beauty items, everyday personal care items. I think the likely losers in that is traditional drugstore, where I've probably got less and less a reason to go to a drugstore unless I'm desperately out of something or I need I'm getting a cold and I need to go get some cough medicine right now. But
they're doing pharmacy now too, right?
That's
they're moving
right.
into the pharmacy space, yeah.
So, the drugstore relied on you going to get cold medicine and then probably wandering over to buy some more lipstick or foundation or mascara, or even shampoo. Now I'm standing in the shower and I'm like, well, I'm about out of shampoo or soap. You don't run to the drugstore. Your shaving cream. You don't run to the drugstore. You're like, well, I need something on Amazon. I'm just going to throw this in too. And if you look at, and this isn't just sort of pontificating over a podcast. This is very real. If you look at the Nielsen data or the IRI data post-COVID, the deceleration in beauty in drug has dramatically, the deceleration has accelerated, for your differential equation folks out there. Anyway, so that a little engineering background.
Yeah,
there.
speaking of differential, what made you decide to go from engineering to finance? I mean, that's what you studied in school, right?
Well, I wanted to wear pocket squares, and you would never do that as an engineer. So, so no, seriously,
that was the
yeah. So I loved. I was good in math, and I loved math as a kid. I loved kind of physics and the way the world worked. So the counselor told me to go be an engineer. So I went to college and worked really super hard and got an engineering degree and found myself at Boeing out of college. And what I found is that although enamored by big airplanes, I wasn't necessarily enamored by the day-to-day of my job. And I quickly realized that I loved people and I loved building relationships with people, not necessarily, how to make a jet engine go faster or live longer. But I really liked the idea of working with people, helping people. And I also kind of fell in love with the stock market, the capital markets, was fascinated by finance and how that all worked, and wondered why I didn't go get an accounting and a business degree. But realized that the relationship aspect of banking and finance was really what I loved and loved to do. The other piece is one of my initial jobs out of business school was actually I was doing tech and healthcare investment banking, but had a small assignment around consumer brands, and just loved the way or the thought around brand on the shelf, how brands were marketed, how they were distributed, why consumers fell in love with brands, And, sort of then coupling my interest in finance and problem solving with a fascination of consumer behavior, voila, there became my, interest. It was a perfect marriage for me of working with clients and brands, but on the, finance and banking side. So
Yeah, well, I mean, I think
kind of lucked into it a little bit, but I guess it wasn't by accident.
yeah, I mean, I think, you find something that you're interested in, you just continue to dive in that direction, right? And then all of a sudden you're like, oh, wow. Like, I certainly can tell you, I did not plan on having a podcast interviewing beauty executives when we started Tribe 8 years ago. Yeah. But now we're here and it's like, and I love it, right? Yeah. And so, so talk to me a little bit about kind of beauty, because now that's your specialty. Yeah. It seems like, obviously, I'm sure you can delve into, other categories, but what kind of led you into that category specifically? And
Absolutely.
then, have you ever thought about going into other categories? Is it like, I mean, there's just a lot of advantage to having those relationships.
So I mean, just broadly defined, I've always been fascinated with brands and lifestyle brands, and as I mentioned, why the consumer loves and adopts certain brands. So that is a start. Early in my banking career, I did a bunch of stuff. I worked in food and beverage. I worked in outdoor active lifestyle. I grew up in Idaho. I loved to fish and hike and bike, but also I was exposed early on. One of the first deals I worked on as a banker was the IPO of Bare Essentials, and being intellectually curious, and I felt a little strange at first, but I would just wander into Sephora and wander into Ulta and just look around, and my eyes were just blown away by what I saw, and just how much the consumer, we say she, right? How much she loves interacting with product and trying product and experimenting, and I think whenever a woman walks into a Sephora or Ulta or a department store, or now gets online and explores social, they're always looking for something. They're always looking for that something that surprises and delights her. And I don't even think they're looking for a silver bullet, but it's a moment of escape. Ulta often uses that. It's a journey into our store is a bit of an escape, and you really see that. And that's also the answer as to why Amazon is not ever going to take over the beauty world. It's fundamental human behavior to want to experiment and explore, to touch and feel. And yes, you can do some of that online, but you certainly can't do all of it. And that journey and that human need to go on that journey is, I think, overpowers sort of anything that you can do digitally.
Totally. I mean, this is going to be me trying to sound like I'm manly, but like we bought a house and about a year and a half ago, and there's an Ace Hardware nearby. And I've just found myself, like, I go in and just walk down every aisle because I'm like, I wonder what's in here. Maybe there's something I don't know that I needed, right? Yeah. And it's like, but I think in a lot of ways that, that experience for me can't be replicated online, right? Like scrolling through a page on Amazon just isn't the same as like walking down and seeing something physically that can, you're like, oh, wow, that's really cool. I hadn't thought about that before.
Yeah, you're right. You're exactly right. You may run out of light bulbs, and you'll go on Amazon and throw some light bulbs in there, but you're not just going to explore just for something that you may or may not need on Amazon. But yes, you're right, that your walk through the hardware store is the guy's version of probably the woman's version.
Well, again, and I do this all the time in all other categories. It's just, for me, I think it's the most surprising because I literally never went to hardware stores before that. It was like I bought a house and now I'm like, oh, this is actually pretty cool. So talk to me about, for most of the people that are going to listen to this podcast, they're either going to be entrepreneurs, aspiring entrepreneurs. They'll be inside some of these brands that maybe are looking to sell. And I think, there's not going to be many times in their lives where they can get a real insider's view into how this process works, right? Yep. So walk me through. I'm a brand. I reach out to you and say, hey, Shaun, I think it's time, right? I want to explore kind of selling my company. Yeah. What does that process look like, kind of beginning to end?
Yeah. So the answer is it can look very differently depending on what your goals are. So we start working with companies that they may even be interested in, they're 100% owned by the family, the entrepreneur, or maybe they've taken on some friends and family capital or angel round to get off the ground. And they may be looking to sell a small stake in their company. Oftentimes they've never done that, so they've built their company over years and years and years, or a decade, and they've made the decision, hey, I'm ready to do something different in my life, and I want to sell, and I'm willing to help transition with the company, but I want to go do great things, right? I want to travel the world or do things that are charitable, and so really we try to sit down and understand what your goals are. Is it succession planning? Is it I'm only going to sell to a strategic, or I'm willing to sort of contemplate that private equity round and sell to a strategic. I want to transition the business. Strategics love to buy companies from founders, but there's always that question of what's going to happen when the founder leaves. And I think the best situation you can put yourself in if you're a business owner is have an answer to that question, right? Who's going to take over for me when I inevitably want to move on and do something different. Now, there's cases where founders have stayed on at big beauty companies for a long time. Look at Bobby Brown and Estee Lauder, Francois Nars at Shiseido, and they've lived, Wendy Zomner at L'Oreal, and they've lived, rewarding, wonderful lives inside of the big strategic. There's certainly lots of cases of the opposite where people wanted to walk away right away, and those brands have thrived and had tremendous success inside of the strategic. So, I think if you're a great business and you're highly desirable in the market, there's the buyer's going to figure out a way to make you happy because they want to buy your business and they want to do the right thing. They're making a big financial bet on the future when they make an acquisition, and so really understanding what they want as the entrepreneur, and then building the plan for them to help them achieve their goals. And anytime we design a process, we design it with the goal in mind for that. Well, whether it's a founder entrepreneur or certainly if it's also got a private equity involvement. More often, that's a much more clear-cut case. If a private equity investor is in the business, they're looking obviously for a big sort of strategic outcome, usually in this part of the world. So the advice to the founder, I can't say enough, and this probably sounds very simple, and maybe you've heard it before, but find a good accountant, hire a good accountant, hire a good controller, implement. There's no excuse from day one to not have good books and records, whether you start with QuickBooks or NetSuite and then you migrate over time. It's very simple to implement cloud-based accounting software.
Do you run into that often where it's just a mess behind the scenes from a financial perspective, or not too often? There's
some, usually folks have kind of gotten religion around QuickBooks. They may not have done it right away. Then they struggled with it. Usually by the time they get to us, they've figured out some accounting work. But they always tell a nightmare story about how they wish they had done it differently from the start. So my advice is, start right now. But and it's not just, I'm not saying that about accounting so that you can balance your corporate checkbook. I really mean because take and utilize accounting software and understand the KPIs, right? The key performance indicators. What are the levers in your business? What are the things that you need to monitor? And unless you start with a good foundation of tracking your business from a financial standpoint, right? Building proper books and records and journal entries and all that good stuff that unfortunately I think makes a lot of beauty entrepreneurs' eyes glaze over. But you don't have to do it. Just hire somebody that will. Because it's not about making my job easier to sell your company. It's really about understanding your business, right? Are you profitable?
Yep.
Are you is this retailer profitable? Is this channel profitable? Are you making money in e-commerce? Are you making money on the sale of a single product? Which actually is a nice segue into my next piece of advice, which is not original to me, and I believe Mr. Lauder would say this as well. Make money right away. Don't develop a model where your first transaction is a loss leader. We're not in the software business. We can't have some sunk cost that ultimately the output is an infinitely scalable product at 90% gross margins. We make something, we sell something. We need to make it at a price that's at a margin that works. I would say generally 60% gross margin or better. And your cost of acquiring a customer shouldn't be more than you sell the product for, and whether that's online or on the shelf. And these things are simple. You'd be surprised at how often they're not sort of held to, or they're violated based on another thought or a proposition of build it and they will come, or build it and we'll get, and scale will make up for margin. It just never.
I mean, you see that with the venture dollars coming in, right? You've got venture dollars that are traditionally used to investing in software companies, which is is no marginal cost to add a new license for the most part.
That's exactly right.
I
think there are cases where those venture dollars in consumer brands, consumer companies have worked, and there are probably more cases than those that they're struggling because they developed a model around too much capital, and probably didn't develop a unit level model that made money. And there's a difference between losing money right away when you sell a product and actually making money at the unit level, but then using capital to scale a business that needs growth capital. Very, very different. It's perhaps sounds subtle, but it's very different. If I need working capital to grow my business, but at the unit level I make money, that's certainly something that's favorable. But to raise money to fund losses on day one because I don't make money on my fundamental product, I think that's a tougher road. That's a tough road. So
you mentioned KPIs. I'd be curious. I mean, you've developed this specialization in beauty, obviously, but at the same time, I think you've been involved in a lot of these digitally native or digitally forward brands like Charlotte Tilbury, Drunk Elephant, Too Faced, Morphe. What are the KPIs that they're presenting on the digital side? Like if I'm a brand and I'm trying to figure out, okay, what are the numbers that are important when I'm trying to sell my company or raise money for investment? What are they paying attention to, the investors and the acquirers?
Yeah, another excellent question. And I think also what I would say to listeners is there was a time when the digital native business was much savvier in digital than were the big companies. And in many cases, they were buying to learn because they didn't know about digital and they didn't know about social. I think those days are way past us, meaning the big players are now very sophisticated. They know how to live and work on Amazon. They know how to build their own e-commerce platforms. And now their digital businesses are in the hundreds of millions, if not billions, in the beauty side. So they know all the KPIs. They know how to assess the KPIs, which are the ones that we sort of talked about. Make money at the unit level, meaning is my first order, is my average order higher than my customer acquisition cost? Am I truly getting repeat purchase that actually equates to a lifetime value that is logical and not sort of exaggerated? What metric, how am I calculating lifetime value?
I mean, that's so tough when you have somebody that can buy on your website, then go and buy in store, and then maybe buy at Amazon.
Absolutely.
Like, how do you track that person, across all those different ecosystems?
And that's another thing. Be real about your marketing costs, and be real about the marketing costs you be. When I say be real, be intellectually honest about which marketing costs you're allocating to CAC. And I get it. You do something on Instagram, they may not buy off your website, they may buy in Sephora, and that's the multi-channel world that we live in today. I think as long as you put some intellectual rigor around it, and I believe most folks know in their heart of hearts what's working and what their real costs are. Yeah. And they need, and as I said, just sort of be intellectually honest with yourself about what costs are loaded into your KPIs. ROAS is another big one, right? Return on ad spend. How do you, if you're a multi-channel business, I think it's if you're sort of in the click and buy mode, that's certainly easy to track. But if you're sending an ad or sending an email campaign, and they don't go right into buying, but they buy an Ulta or Sephora the next time they walk through, I think you need to understand that. But also, there's ways to figure this out. If you're running your own campaign, or you're doing something on social, and your .com sales sort of do okay, but you watch an Ulta.com sales go way up, or Sephora's .com sales go way up, then it's probably working, and you need to think about how you allocate that in your metrics. The other thing I will say is, sophisticated companies today are not competing with different channels digitally. Meaning, if Sephora is doing something with your brand, don't go out there and do something digitally direct on your own and compete with Sephora to try to outdo Sephora and drive folks to your website, right? Yeah. You want to be coordinated with your campaigns, right? When Sephora's off, you're on. If you happen to be an Ulta and Sephora, make sure that Sephora and Ulta don't compete with each other, right? You shouldn't be competing with them either on digital. So, the other part that clearly just being on Instagram and Instagram likes or Instagram followers, those days are now over, and you could tell folks that better than anybody. I think what you guys are doing around engagement and retention of influencers is super, super important, and needs to be monitored and tracked, because that's really what you're looking for. Are you identifying? Are you catering to? Are you speaking to influencers that aren't just sort of one and done with your brand, but really are engaging and staying with your brand, because it speaks to them, back to that word authentic. If your brand isn't genuinely authentic to them and doesn't speak to them, well, guess what? They're not going to really talk about it that much. It's going to be sort of a one-off, and it's probably going to be diluted by talking about a bunch of other stuff at the same time. So.
Yeah, I mean, that goes back to when we both, I think a big takeoff point for both of us was Nix, right? When we met Nix, it's like, wow, they're doing it way differently than everybody else. And in the metrics we're tracking, right, which was EMV at the time, the numbers are just through the roof. Like, what are they doing that's different than everybody else? And it was, long-term relationships. That's right. Authentic relationships, right? Supporting the creators as much as the creators supported them. And it wasn't about going out and finding Jennifer Lopez and paying her to talk about the brands, right? Yeah. Yeah.
Well, that was the mistake I think the big brands made initially, is they were basically utilizing influencers. They were essentially doing things the old way in a new medium, essentially saying, well, this is like a magazine ad, and we're going to pay a spokesperson on social just like we paid a spokesperson to be on TV or in a magazine. And clearly that came across as very inauthentic, and it was what it was. It was paid advertising, which didn't resonate with the consumer, right? That consumer was following somebody because it spoke to them as a person, not as being, I want to, because XYZ celebrity talks about it, then I want to buy it. That's first of all, that doesn't, we'll see about, we know there's obviously an onslaught of kind of celebrities getting into beauty and using social and trying to leverage their star power to sell beauty products. I think if that individual does it in an authentic way, then it works. If the consumer kind of sees, oh, they're just doing this to make money,
they're just slapping their name on it and putting a logo on some private label product and hoping they can make a quick buck. That just doesn't. I don't think it'll work. I do think
and
there's
by the
something.
Way, there's no exit for that business because the buyers will see right through it too.
Yeah. So talking about buyers here for a second, one of the things that we've been paying attention to is there's different trends that happen. So right now, if you look at like Ilia or Kosas, right, not only clean beauty was kind of confined to skincare and a little bit of hair care, but it's now getting to the makeup side.
Yep.
Are you seeing, are the buyers in this space looking to get more exposure there, or are there other areas where they're saying, hey, I really want to get into this market? Are you seeing particular interest in particular categories?
Yeah, so clean beauty. I think clean beauty is now the price of entry. It's the, as we say, table stakes. If you're not clean or you're not close to getting clean, there's probably, there's not really much of an opportunity out there. Because I think the consumer is now very educated, very wise. Especially the consumers that are up and coming, the millennials and Gen Z, they're very educated on what's good for you, what's not, and they're only going to buy clean beauty. So that's the entry point. The other piece is, are you genuinely clean? Are you truly clean? Again, authentically clean, or have you attempted to greenwash your brand? So you have to start the right way, and obviously that's what Drunk Elephant was, and that's why it was so well sought after. Is Tiffany started out that way in a very focused and really defined in her way what she felt was clean skincare, and that didn't mean just 100% natural and organic. It just meant it was efficacious and there was nothing bad for you in it. It was okay to have a powerful ingredient that may not have been 100% organic, but it was at least biocompatible and wouldn't be harmful. So I think that the whole industry is shifting and has to shift. There are obviously legacy brands that have very, very strong consumer following, and not every consumer cares about it, right?
Yep.
I think for pathways of digital, specialty beauty, the channels that are growing, then generally I would say you need to be clean. Now, there are consumers that just want something to work and work very well. That's probably very much more in the heavy-duty professional, science-driven. Perhaps they're not completely clean and natural, but that consumer doesn't necessarily care about clean and natural. They're looking for heavy-duty, functional performance, and they'll do it any way they can get it. So that by the way, also is a big part of the market and growing.
The makeup artistry community,
the fountain of youth seekers. They're willing to go with something that may not be clean, but it works. So
that makes sense.
And that's obviously a well talked about baby boomer aging population. Yes, they would love everything to be clean and natural, but they want it to work too.
And are the kind of strategic, which for those that don't know, strategic players means bigger consolidators, L'Oreal, Estee, Shiseido, et cetera. But are they pushing to get bigger in those categories, or is it pretty well known and they're just trying to transform their existing brands to kind of match that market?
I think it's all the above. There are white spaces around authentic, clean beauty that works, whether that's skincare, hair care, or cosmetics. I do think there is opportunity in truly scientific, clinical, proven, results-driven. And it can't be bad for you, but does it have to be clean? I don't think so. That channel, called the derm, the professional channel, is growing very nicely. It obviously hit some troubles in COVID when it was closed, but it was growing tremendously well. As I think this is a bit of Shaun Westfall theory, but I think that what's going on is there was a class of consumers that would go to the department store and had a relationship with someone who was a skincare enthusiast. As that channel and perhaps they're seeking another way to be educated now, and they don't necessarily. It's a consumer that doesn't want to do it online. They want to go be with somebody and talk to somebody, and that is the esthetician. So the esthetician is the new influencer in serious skincare, and that's something we saw with Hydrofacial, which it was recently announced in a very successful sale to a SPAC.
They're SPACs. I actually got a Hydrofacial one time because we worked with them, and they're fantastic. It's a great system. But we saw that, to your point, on the estheticians. When we look at CeraVe or CeraVe, a huge part of what's driving their growth right now, which they went from the number 76th ranked brand we tracked to number 25 over the last 3 years. In skincare, is these digital estheticians, right? We're seeing that start to come online, which I think was a little delayed because people like to do that in person. So another thing that I think was accelerated, which is interesting.
Yeah. Well, estheticians, they're a different type of beauty junkie, right? They're a skincare junkie. I mean, they are in fact the definition of the skincare junkie, and they're credible, they're thoughtful, they're passionate. And they're finding a voice through social, right? They're kind of the skincare, or the skincare version of a makeup artist. So, and they have credibility, and they have a life and a lifestyle that I think consumers find the esthetician online that they love, and again, that's a testament to the sophistication now of L'Oreal, how they took that brand, which people just thought of as a sort of regular drugstore skincare brand, therapeutic skincare brand, and look at what they did with it. So, again, that shows that there's just tremendous white space for people who are seeking serious skincare in any channel, whether it's at the very high end in the derm doctor office channel or med spa channel, down to back to food mass drug where CeraVe sold. So, I think the market continues to grow very nicely, and that there's a lot of debate about color and mass versus prestige color, and when's color going to come back. And I think skincare's always been there, but really as consumers have sought out self-pampering, self-indulgence, they've really sought skin and body care as that part of the market, and that clearly exploded during COVID, as you saw with even CeraVe and Thayer's and a bunch of other brands that you could find in traditional food mass drug, Amazon, etc. Yeah.
So before we get into kind of the fun end of show questions, I think the last question I had is it's just something that I've been fascinated on. I've never heard your opinions on it, so I'm actually kind of curious because you've actually been involved in some of these deals, which is, we communicate with a lot of the private equity firms, and one of the bigger plays was like, hey, we want to build out a competitor to these kind of traditional strategics. We're going to do, and it's going to be a digitally native competitor, right? So let's use Morphe as a platform to launch and manage brands. And they're doing that, right? I think to a lot of success. Do you think, how viable do you think that is as an option? Or is it something where, the advantages of digital just aren't, don't really make that a viable option? I just have to imagine that you've had a lot of those conversations.
Absolutely. The new platform, or the new platform consolidator question. I believe the market is wide open for someone to emerge with real scale that rivals the legacy consolidators. Now, they're always going to be here. They have tremendous capability and distribution might, but the ability to disintermediate legacy shelf space has never been more apparent than today. You can tell millions of people about your brand instantly. You can connect in a two-way conversation instantly. And there's just some amazing companies that are doing this. They've taken the COVID era and said, you know what, we're not just gonna sort of take this lying down. We're gonna take our best people and we're gonna invite one-on-one conversations. We're gonna take our makeup artists that were in the field and we're gonna turn them into consultants online, where just like you and I, they're doing Zoom calls through, you know, there's a mechanism to filter and find the makeup artist that speaks to me. One of the problems right now is if I'm a consumer and she's looking for something interesting and new for me, and I go on Instagram, I'm overwhelmed by the sheer magnitude of influences there are. How do I find the one that even speaks to me? So, you know, we're seeing brands that are developing tools to filter and identify the influencer that connects with me, or at least through AI and analysis think will connect with me. And then we're creating that one-on-one true relationship that you might have had with even the Avon lady long ago. And we're now doing it in the digital world. And that she understands me, she understands my skin tones, she understands what I like, what I don't like. And she's able to recommend to me what works for me. And she's able to teach me how to put on makeup, and we do it together via Zoom. I think that truly, if there's something that will sort of ultimately break down the need to walk into a store, that's probably it. I'm not saying that that's going to sort of end into this to retail, but it's certainly, and in fact, I might suggest it continues to expand the market and invites a whole new class of consumers into learning more about beauty, learning the power of beauty. And, you know, they're going to shop online and they're going to shop in the store. They're going to do both because they value both. Yeah. So yes, companies, I do believe there is going to be a platform that emerges, whether it's Morphe or, you know, something that, you know, a SPAC starts to consolidate some emerging digital brands and, you know, figures out how to very efficiently, specifically market certain brands to certain consumers, but has a fully integrated back office of best practices and distribution capability. Perhaps they incorporate manufacturing so they can be extremely quick to market. There's literally no lag because they're not relying on a vendor.
Well, that's like Seed Beauty or Mesa Group, right? Mm-hmm. Those are two big players that are trying to do that, where you can, you know, when you have distribution or manufacturing in-house, you can turn around stuff really, really quickly.
That's right.
Based on consumer interest. Yeah,
you listen to the consumer and 2 days later, you've got something rolling out the factory floor. That's impossible to replicate if you're using outsourced manufacturing. So I feel there's definitely an opportunity. The market is growing faster than the big brands are growing, and they simply can't acquire. They just by sheer nature of they're not going to slice the pie is so ultra thin, and there's always going to be room for a new consolidator.
Yeah, it's going to be weird. It'll be interesting to watch how it changes. I mean, there's so much opportunity there, right? Like, the thing is, you can have a really big new consolidator that doesn't take a bite out of L'Oreal or Estee, right? It's just like a totally new thing, right? That can be $10-20 billion in value.
Yeah, so, I mean, my livelihood is dependent on finding that next interesting brand to sell, and at times I'm like, wow, is there anything left to sell? And lo and behold, somebody comes up with something amazing, and my hat's off to entrepreneurs, because in this industry,
you're dependent on that innovation.
Yeah, so I'm dependent on, I know you're out there, you're working on something in your garage, so keep at it.
I'll be here.
Yeah, I'll be here. Exactly. Cool. But it's, and I go back to it, just the passion and conviction that entrepreneurs have in this industry, and they know that the white space is there for them, and they just believe. And it's really amazing. It's just, I'm so fortunate to be a part of it.
Yeah, for sure. Well, let's get, we're coming up on time. So let's we'll do one fun end of show question. So, I think investment bankers are kind of notorious road warriors, right?
Yeah.
You're just on a plane constantly. So I guess first question is, do you plan on getting back on a plane? I know you've been on it a little bit, but at the same level that you were before, or do you imagine doing a lot more things digitally? So I think that's the first question. Yeah. And the second question is there anything in particular when you do get back on the road that you're looking forward to? And I'll tell you what mine is. Whenever I go to New York, I get a really good steak dinner, like nice wine, because you don't get that kind of dinner in San Francisco. No. It just doesn't happen. And so anything that you're actually looking forward to about being back on the road, because of course,
Well, I wouldn't be in this industry like you if I didn't like a good steak dinner in New York. So I too am looking. So to all you restaurant, you steakhouses in New York, look out. Conor and I are going to be there soon. But no, I'm excited to get out and visit with clients. This is selling someone's business is a very intimate thing. It's very much built on trust and relationships. We sell an intangible. We're not like, when we get on Zoom, we're not trying to collaborate a product launch. I mean, we are trying to understand fundamentally what the goals of this individuals and team, and it's very much a relationship driven situation. And we're part-time consultants, sometimes we're part-time psychologists and therapists as we embark on the journey. And I miss sitting in a room with clients. I miss sitting around a board table, sharing ideas, collaborating, drafting, all the things that we do as bankers to tell the story. Zoom has obviously made it much, much more efficient for us. But I wouldn't be in this business if I didn't like sitting with clients over dinner, building relationships, becoming their friends. And it's hard to do that over Zoom, certainly. A lot of those I miss my friends. I miss my clients. I miss dinner with my clients.
Well, I mean, so many of those have to be, just relationships that you then have over the, years, right? The lifetime relationships a lot of these turn into. It's not just a transactional thing. So
yeah, absolutely. We are, agree. It's much more complex, and thankfully, I don't know that the machine or the computer is ever going to take over my business. So I have that going for me.
That's good.
But it's. I've embraced Zoom. We've been, heavily, successful maintaining our business, winning new business, successfully getting results for clients using Zoom. But I think I speak for many folks. We all miss the human interaction in a business setting, and I think there's something to be said about the random walk around the office where you joke and you laugh and you share ideas, and that's just difficult to replace. So I know it's going to be different. It's going to be better, different. It's going to be more efficient. I think we'll obviously try to be more judicious before we get on an airplane, and perhaps it's going to be the best of both worlds. So that's what I'm banking on.
That'll be great.
The roaring 20s, as they say, again.
Well, let's just hope they don't have the same outcome, right?
Yeah, exactly. Without the Great Depression at the back end in the war. So, yeah.
Awesome. Well, thanks so much for joining, Shaun. I really appreciate it. And I know I learned a lot today. I know, there's just so many people that are going to listen to this that don't have the opportunity to kind of have these kinds of conversations. So they're going to appreciate you taking the time out. So thanks again.
Well, thank you, Conor, and thank you for the venue. Really appreciate it.
Of course.
All right.
Bye, Shaun.
Take care. Bye-bye.
Hit subscribe now. Earned by Tribe Dynamics. Tribe Dynamics unlocks your social media influencer community. Our platform not only tracks and measures your best influencer relationships, but discovers new influencers to grow your business through earned media. Get started with a demo today at tribedynamics.com. tribedynamics.com.